All right. This is what it looks like when we take a loss. We took a little bit of an L today at Likefolio. I'm going to read to you what we said in our opportunity alert to clients. American Express has been exhibiting significant weakness across all metrics of Likefolio data. While their stock price remains close to an all-time high of $100 per share, AXP purchase intent, consumer sentiment, and total mentions have been steadily falling. We're initiating a bearish alert for AXP going into their earnings report next Wednesday with a recommended duration of 3 months after the report. We did say key points. Financial institutions like American Express are not where purchase intent is the most predictive, but a shrinking level of consumer happiness for a company that is primarily a service provider means they are likely to lose customers or grow at a slower rate. So that was our prediction. Here's the reality that hit last night. American Express earnings beats $1.86 per share versus $1.71 per share expected. American Express shares rise after its first quarter results beat estimates on Wednesday. And the stock is up 7% into a bearish position by us. Just a good old-fashioned miss.
Yep.
You know, it happens.
It happens, you know?
It happens.
You can't win them all. It's part of the game.
I know, but I get so angry when it happens because I feel like, you know, it's not that often that it happens. And when it's just that blatantly wrong, it really angers me. I get angry. I've been a little off today because of it. I hate it when trading impacts my normal life, but that's what's happening right now.
But you got to zoom out and look at the overall win percentage and ROI. We are doing well. So it's inevitable. You can't go 100%.
I know, but that's the goal. I think 100% should be Likefolio's goal.
Of course.
So those of you on the Opportunity Alerts product at Likefolio, you know, I'm with you. I hate it. I hate missing, and you know, hopefully the other ones are more than making up for they should be. But we got a lot coming on to that right now because we're getting into earnings season now, and that's when we have the most fun.
Yeah, this one was like kind of a tax, I feel like, because I was up well on previous trades, open positions.
Yeah, no, I know.
So it's like,
I'm not.
That always makes losers easier to swallow.
I know,
for sure.
But just let me stay mad. Let's move on from trading because I don't want to talk about trading anymore. In fact, I'm just going to throw them. American Express is out. It's out.
Get that out of here.
I'm not doing any more alerts on American Express unless it's just blatant. Landon's been working very hard on the Likefolio white paper, which is upcoming. It's not ready for publication yet, but let's get into. I want to talk a little bit about kind of behind the scenes at Likefolio because we are a data company, and this white paper is very data heavy.
Right.
And a lot of times we're just talking about stocks and trading and stuff like that, but.
There's a meat grinder in the back making these sausages.
There's a big time meat grinder. So let's hear a little bit about how the sausage is made. So tell us just about like what your what your goals were for the white paper.
Sure.
And we'll just go from there because it's really cool. I mean, it's been weeks.
So the story of Likefolio was long ago. We were trying to show millennials that they and their friends were talking about publicly traded companies and they could invest in them, right?
Yep.
That's how we got started.
Yep.
And I couldn't help but pull the data and start looking at it because I wanted to see if maybe there's a way I could make some money on this info. And it appeared to be good. And that's the beginning of how Likefolio got started in moving into like predicting the movements of the stock market. And so maybe like 2 or 3 years ago, or maybe like 2 years ago, I did my first kind of analysis and determined, okay, this is profitable. But it was, just me hacking hard on Excel, and it wasn't super professional. It was just kind of confirming what I thought.
Yeah.
And we sell to some very discerning clients now, and so
we attempt to sell to some very discerning clients who
Right.
just aren't having it if you don't have.
You got to bring it.
Right.
You got to know your
Right.
stuff. And the file that I created a year and a half, 2 years ago wasn't cutting it.
Right.
I mean, just bottom line. So
I mean, I thought it was good. It was impressive,
Right.
And you could tell that we were on the correct direction,
right.
and so there was something to this, but it was not to the level
No.
expected by.
Like a quant fund.
Yes.
They're like,
Yeah, they're a little more demanding, huh?
so I decided to really dive into it. Actually started October or November of 2017.
Yep.
And I began creating a massive Excel file that is a program that analyzes all of our data, compares it to the stock market, and essentially back tests in a very
Compares to revenues.
compares
as
to
well.
revenues, but it also
Reported revenues by these companies. Yeah.
it reports. Yes, it does compare to reported revenues, but then it trades obviously on the stock price.
Yeah.
So, and that's an interesting side note is anytime we try to predict a stock, we're talking about top line. We can't predict expenses. We
Correct.
can't predict external events. So if something crazy moves that market, helping us or hurting us, it's just kind of like,
Yeah.
you know, our powers are limited to the top line. Anyway, so I started months ago, and I decided, eventually I've got to cut the data off and say this is the data that I'm using. Our data starts in 2012, and it just kind of made sense. I was maybe a month and a half into it when the new year rolled around. I was like, okay, new year, that's when we're cutting it off. We've got 12, 13, 14, 15, 16, 17. We got all those years. And so it's 6 years total of data. Is that right? 12, 13, 14, 15, 16.
Yeah.
Yep. 6 years total of data. And that's going to be our period for this white paper. And I can refresh it next year, or maybe if time frees up, I can do it at the 6 month mark, every 6 months, something like that. But anyway, so I started building this, downloaded the data, and built a huge model on like essentially creating alpha out of this. And so the system that I came up with, which has remnants from 2 years ago, was 2 years ago I was trying to find, how do we turn this into a trade?
Right.
Like if purchase intent's really high today, should we buy the stock? Or should we look back for a period of time? And I did a ton of analysis on that 2 years ago, and I concluded that the 90-day moving average is the ticket.
So the 90-day moving average of purchase intent.
Yes.
Volume
Yes. Essentially
is the key kind of metric in terms of predicting revenue and therefore having something that you can use to trade the stock on.
right. Exactly. And so that's basically the last quarter, right?
Yep.
And since stocks report quarterly, it really works out. And so what the system does, and I don't want to sell too much of our secret sauce, but it compares that 90-day change, that 90-day moving average that changed since last quarter,
Yep.
versus 90 days ago. And we see if it's that up or down, and we look, is the stock up or down during that same period? And so we're trying to see, does the market already know what we think we know, right? So if the purchase intent's up 10%, the stock's up 10%, it's kind of like, I don't think we have an edge here.
Right.
Right. But if purchase intent's up 10% and the stock's flat or maybe down 1 or 2%, we're like, okay.
Yeah.
We think we might
That's
have
when we
something
start
here.
drooling.
Yeah,
Yes.
that's what we've called the divergence opportunities
Right.
in the past, but now we've put numbers to it and a
Right.
scoring system.
We've
to
been
it.
doing that with our eyes this entire time.
Yeah.
It's just when you put numbers on it, exactly.
Yep.
And so it's been an interesting process. There's more to it. I don't want to give away all of our secret sauce.
Right.
But I will say that it is definitely repeatable. That was one of my primary goals, was this has to be repeatable. It can't be like, well, if you're buying, you buy at the low point of the day or something stupid like that. Like if anybody could do that, they could use any system. They could use,
Yeah, I think what you went off of is the next day's closing price, right?
Right.
So,
So
you have time for
super.
analysis.
Yeah, so if you could like analyze it all day
Yeah.
and say, okay, we think this is a buy. Tomorrow you could talk to your party and make sure they agree and confirm, and then you buy at the end of the close.
Yeah,
Like,
because that's the
tons of
way
lead time.
that's the way we suggest that people utilize our data, and that's the way that the super professional clients of ours do utilize the data, and that is it's part of a research process.
Right.
Right. So it's not just ding 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 buy sell buy sell. It's this is part of a research process, and if something triggers, you want to have time to take a look at it
Right.
before you.
It's got to be fair. It's got to be repeatable.
Yeah.
Exactly. The data, the study itself.
And so, just for people at home, I mean, Landon's desk is like 7 feet away from mine, maybe 6. And when this thing is cranking,
Oh, God.
it sounds like an airplane taking off. His computer goes into like
jet
this.
engine mode.
Yeah, it goes.
Absolutely.
Megan said she thought it had a space heater.
Probably feels like it for her,
Yeah,
Yeah.
that's true.
being so close to the
That's
computer
true.
tower.
That's
And I
maybe-
used to use, before I was like a year and a half ago, I used AWS spun up machines for that. I had 10 going at once
I remember
to
that.
try to crank all this out, like really figure it out. But once I figured out the core, which is like the 90-day moving average, then it's easy for a computer to do it, even though it's still
Right.
I mean, when I leave work, I'm pushing a button, and it'll be done probably by the time I get back tomorrow.
That's awesome.
It cranks hard.
So what was? I mean, so not about like folio data, but just in the process of making a white paper, because most people, like I was telling Nick yesterday that this was going to be a topic, and he was like a white paper for cryptocurrencies,
Yeah,
because that's a lot.
blockchain technology.
That's how a
That's-
lot of people have gotten introduced to the concept of a white paper over the
Right.
last
Sure.
6 months or so, all these ICOs. So the process of creating a white paper, what was, like, how did you start down that road? Did you download some examples?
Yeah, I read others because I had no idea.
Right.
I mean, I knew the goal was to explain what we do and to do it in a scientific / impartial way
Yep.
that was very defendable, but obviously showing off, trying to drive the person towards a conclusion that is
Yeah.
true.
Yeah.
But you have to do it in a way that's very, very defendable and data driven, not emotional and all that. So, reading the other people's white papers in this space were very helpful. Very helpful.
So I guess the best way to kind of describe, maybe not the best, I'm going to try to describe what a white paper is.
Sure.
It is a marketing material that is written in a statistically, mathematically, scientifically defendable
Right.
manner
Right.
that is fairly that is void of any superlatives or whatever. It's like, here is what we have,
Right.
and here's how you can use it, and here's how samples of ways to use this that bring about a positive result.
Yep.
Okay.
Exactly. I think that's it.
And then like real quick, what was one of the kind of interesting, funny, or unexpected things in the process of your research or writing the white paper, whatever?
Yeah. Little tidbits.
Yeah.
I had some, and some of these were like a year and a half, 2 years ago when I did it, and some of them were recent. But so one of the things that we do is look at threshold for entry. So we need a stronger signal to enter depending on how high our threshold is. So if we want to be really discerning, we say, okay, we only want it if it's a plus 15% trade.
Yep.
Right? And so then anything less than that, you just don't enter. That decreases the number of trades you have, and it increases the profitability per trade. Well, one thing that I noticed was at 0% threshold, which means any edge at all, we're taking it. There were an unbelievable amount of break-even trades and like zero gain. And that zero is like, that's different. I'm not talking about 0.01. I'm talking
Right.
about zero.
Like you literally entered and exited at the exact same price.
Exactly. And that had me scratching my head. I was like, what is going on?
Yeah.
Well, what it was our signal creates signal on Friday, Saturday, Sunday. There's no, if you enter at the next close, they're all the same, right? Like if you buy on Saturday and sell on Sunday, it's the same price.
Right.
Because it's Monday's close. So that one took me, that was like, 45 minutes, but I remember just being flustered, like, what in the heck?
So
Why?
we got rid of the weekend problem.
Well, no, not really. There's no,
It's because it's the next close.
yeah, there is no problem. It's just,
I see.
It's not really a trade.
Because the purchase intent can change
Yes.
on Saturday and Sunday.
On Saturday, you
but
could
the
receive a
market's not
buy
up, but
signal.
Got it.
Market's
Got it.
stagnant.
On Saturday, you could receive a buy signal, and maybe you're ready to do it on Monday, but then on Sunday it's canceled. You're like, oh, never mind.
If it's a 0% threshold.
Right. If it's zero.
So that's why we wouldn't use a 0%
Sure.
threshold.
Right. That's
So
one reason.
bumping up to 15% threshold eliminated that.
Yes.
Obviously.
Yes, pretty much. Not always, because still there's somewhere on Saturday it's 15.1, then on Sunday it's 14.9. And so you're entering and then exiting, right in that same period.
Yeah.
It's much less common, but it still exists. So the number of signals isn't really how many signals, it's how many signals where the market was actually open. But anyway.
Got it. Cool.
Yeah, and one of the frustrating things was getting accurate historical stock prices that were adjusted for dividends. That appears to be like, I don't know why it's not super available, but it was not easy to get. Finally got it, but that was very frustrating.
Somebody's probably watching this just chomping at the bit to let us know what we should have done for that.
Oh, yeah.
You know, like,
we figured it out. It took longer than it should have, but we did figure it out.
cool. I am looking forward to that. Once it's published, we'll definitely have it on the website. We'll tweet it out. We'll probably talk in here about some of the findings from the white paper. But just in a
Spoiler alert, they're good.
I know initial glance, I was
I
just
like it.
blown away.
I mean, I knew they were going to be good, but
I know, but it was
yeah.
anyway. Let's not get into it. It's good. I was very happy to read the initial drafts, and
It was happy for me too, because you do something like this and you spend many months on it.
Yeah.
Basically 6 months, and I want it to be good, but I'm not gonna I have to. Here's the rules, I have to use our data, I have to do all that. It's got to be replicatable, all that, and it is what it is at the end. And I saw it before. There was no final moment where I pushed a button and it gave me a number. It wasn't dramatic. I saw it coming in over time, and I was okay. Like the first time, I was like, all right, that's good. And the second time, I was like, okay, now we're confirming. It kept confirming, and so it was stressful, but it was nice to see that.
It's very similar to when Elon Musk launches a rocket into space. He has.
Yeah.
I mean, you're
Just like
basically
that.
Elon Musk. It's the same thing. It's like he knows what's going to happen. He thinks he knows what's going to happen, but it's still
You want to see it go up.
it's
there.
still a thrill when it doesn't blow up.
Right.
Right, like 3/4 of the way up.
Absolutely.
And it's still a thrill when it comes back down and lands. We're not to that level of grandeur yet at Likefolio, but in our world, that was the
It's all
rocket ship.
scale. It's all scale.
The rocket ship left and went well. So
There was a moment like 2 years ago when I was doing this, when I wasn't as fine-tuned, and I thought our stuff was terrible because I mean, I did it and I was just like, oh my God, these numbers are awful. How are we losing so much on these trades? And
these are paper trades.
These are historical back
Because
then.
that's not because that just doesn't even fly because the stuff that we were putting out publicly before we had these products was very good.
Right. I didn't get
it was
it.
like
I was like and I was just depressed / like what I was digging, like what in the world? Well, I didn't have stock prices all the way through my test period, so the very last the last day of stock prices was 0 for every company. So if you were long from 110, you were selling at 0, 100% loss, and I was like, oh, small mistake, massive repercussions. So that was 2 years ago. That was kind of goofy, but I remember that stressful moment where I was like, oh my God, our stuff is terrible. But no, it's not.
well, that's what I was thinking this morning when I woke up and looked at AXP up 7%. So I think we'll be all right.
I'm more relaxed about it because I see the scale. When you zoom out the percentage of winners, sometimes there's an AXP that you miss.
Good balance. You're going to be in New York?
Yes. I'm going tomorrow. I'll be there Saturday, though, for TD Market Drive.
So the TDA Market Drive is a free event for clients of TD Ameritrade. This stop is in New York. It's a Saturday morning. Starts around 8 o'clock, I think.
Yep.
And
Registration opens 8 a.m. So it's 8 to 9 a.m.
But they want you to register online first.
register online, then you show up and you check in.
Check in, exactly. It's really cool. They've got
It's a great show.
Tons of information.
For free. It's unbelievable.
yeah. I mean, I've been to, I don't know, 10 or 15 of these, and I'm still going and listen to them because you learn a little bit. These guys know options trading like crazy. It's like if Nick got up there and talked. I mean, they know all the ways to take advantage of probability and time decay and just.
And they got stories from the floor. I mean, it's cool.
I love this.
That's always the coolest part.
Yeah, it's cool. So
cool stuff.
If you're in New York, make sure you get registered for that. It's 2 days from now.
Yes.
It's Saturday, and Landon will be speaking at like 1 or 1:30
Yeah,
about
right after
110 to
lunch.
140. Social data, a unique and untapped market advantage.
Yeah,
Sweet.
and it's a fun presentation. It's a fun
It is,
presentation.
yeah.
Landon does it half the time. I do it half the time, and we each put a little unique twist on it. But it's cool. It's a cool presentation. So if you're there, come say hi to Landon.
Absolutely. I'd love to talk to you.
Yep, and we'll see you then. So good show today. I think we made it all the way through without any major technical glitches.
We're good, man.
All right, I appreciate everyone listening. I'm gonna go lick my wounds on AXP and get ready to fire at the next one though. We're in good shape, guys. Have a good one.